First, Rodrigo, it's wonderful to be with you and with all the participants on this fireside chat. And I think we come together at a very important time because COVID-19 is shaking a lot of our beliefs and habits, and it opens the door, I think, to fresh thinking about a crisis and recovery from a crisis and the kind of world that we want to live in after that. So the first aspect of it, Rodrigo, is how do we help fight COVID-19? And the GSG has put on the table the Global Steering Group for Impact Investment, which Rodrigo and I are part of, and which is now present in 32 countries, including Mexico and Spain, where Rodrigo and Maria are, and Israel, where I am speaking to you from. The GSG has put on the table a Pay for Success initiative, a $10 billion Pay for Success initiative to encourage testing from entrepreneurial companies and more established companies. So it's a very astute use of the tools we've developed. Governments provide guarantees for $10 billion worth of innovation bonds, while providing at the same time $10 billion of orders for tests. And within the COVID crisis, I think a lot of our tools, impact bonds, outcomes funds, and so on, are capable of application. But as your question suggested, the recovery is probably where we can make the greatest impact. And the recovery is, again, as you said, Rodrigo, is going to hit the most vulnerable. And the question is, if government stimuluses, again, are going to aim at restoring the health of the biggest and the most powerful companies and financial institutions, what is going to be the social effect of COVID-19? Now, if we look at past crises like 2008, we came out with even greater inequality than we came in. You had 3 years of recession afterwards. The income gap increased even further. The most vulnerable had even tougher lives because the government stimulus packages didn't really help them. The same is likely to happen again if the impact movement doesn't put the emphasis now on measures that address the most vulnerable. And so the GSG is focusing on 3 key measures. The first one is we know governments are going to emerge from COVID with very high unemployment and with governments having reduced budgets. So we think the use of outcomes funds to pay for the results of retraining impact bonds in our different countries is a major way in which we can help those who are unemployed and can't go back to their jobs. In the US, I've seen figures that suggest that 40% of those who are unemployed will not be able to go back to their previous job. So there's going to be a massive retraining and replacing of people in jobs. The second one is the issue. Sorry, did you want to ask a question? Sorry, okay.
No, go ahead, go ahead.
Okay, so the second one is the area of slums. People living in slums are likely to be suffering higher mortality rates. We think we can use our tools, social bonds in this case, which are not necessarily pay for success, to follow the example that our colleague Seb Welisheko, who's spoken at FLEA last year and attended when I was there, Seb was responsible for a $16 billion effort in Argentina to restore some normality of life to informal settlements. And then the last area is the area of education, because it's been shown that people or kids in particular who drop out of education during crises don't go back. So those are the three areas where we're going to be focusing in the recovery. But COVID, as I was saying, is shaking people's trust in our system. And the GSG believes that just as in 1929, governments brought in legislation to protect investors who up until then looked at the company's financial accounts without the same accounting principles and without auditors. And the SEC was created in the United States to measure, to ensure that investors had the information to measure profit accurately. And we believe that after COVID-19, the same thing that happened in 1929 can and should happen around impact. We should now, as a movement, unite to push our governments to mandate that companies will publish impact-weighted financial accounts. And I can talk further about this in the question and answer period.
And that's a very strong message. And do you believe governments are clearly taking a more active role in bailouts and saving companies? For example, I just heard Germany is doing a bailout in Lufthansa, and it's probably going to happen with a lot of companies across the world. Do you think government now will have like stronger position between these companies, should have like stronger voice in terms of impact, or what's the message we should send the governments to be more active in this sense now that they're going to be having this participation?
I think definitely the aid packages to companies create an opportunity for government to say, we need you to bring solutions to the social and environmental problems we face. And so we're going to mandate that from 2 years from now, you will publish impact-weighted accounts where you monetize your impact and you add it to your P&L and your balance sheet. Getting governments to do anything internationally by way of cooperation is very difficult today, Rodrigo, partly because of President Trump. But it doesn't make it impossible for some governments to come out in favor of this. And it could be if the G7, where we're trying to make efforts to get a declaration in this direction, won't do it, then the G20 in November might. But either way, those who are 70 or so participants, in this chat, should push in their countries for the measurement of impact. And as you know, Rodrigo, the GSG has initiated an effort, an initiative at Harvard Business School with the Impact Management Project to prepare these accounts. And you'll see in my book, which is already available on Amazon, Maria mentioned the title, that I give examples comparing the environmental damage caused by different companies. And we will publish this year the accounts of more than 2,500 companies weighted for their environmental impact. And next year, we will add to that product impact and employment impact. So it's a reality that this can be done.
And Ronnie, how can we build bridges with the government and with the private sector I think the impact investment industry or community was already doing a great job convincing private wealth to focus more in solving social environmental problems. At least in Latin America, we in some countries we're seeing a backlash. You know, like some populist countries or governments are pushing away the private sector. They're trying to get back to this idea where government should be the one that solve these social environmental problems. And even in the case of Mexico, we just recently had a government moving away from renewables. So what role should we do as an impact investment community? How can we send a stronger message, or how can we build bridges with these governments that open?
I think we build them on the back of constrained budgets. Governments are going to emerge with very heavy debt. It's going to put big pressure on their budgets. They're going to have a high number of unemployed. They're going to have greater income and wealth inequality than before. And even populist right-wing governments are going to have to worry about improving the lives of the average citizen and in particular, the most vulnerable citizens. And I think it's on the back of that we have to come with a message that, look, impact investment puts impact at the center of our economy alongside profit. And it helps you, because it brings private investment to change what is a self-defeating system. What do I mean by that? We have a system today, Rodrigo, as you well know, because we've talked about it over the years, where companies create negative consequences and governments tax everyone to remedy them. That's clearly self-defeating. Impact investment says, if you measure the impact and you try to optimize risk-return impact instead of risk-return, you'll bring solutions instead of problems, and you may actually be even more profitable, which is greater revenues for government, but also solutions, bringing solutions to government. So the most populist, the most right-wing government is sensitive to that, because it's, as its name suggests, it's based on its popularity. You're on mute.
Sorry. Do you think these solutions we are seeing as an impact investing industry do you think we should be, after the crisis, thinking more in a global perspective or more in a local perspective?
So I think we have to be both. Like, we have to bring the local realities to government, but at the same time, we have to show what is happening globally to encourage them to act. The great strength of the GSG is that it has national advisory boards like the Mexican one in 32 countries now, many in Latin and Central America, as you know. And I think the ideas that we are discussing in this webinar are ideas that each of our NABs has to pick up and adapt for its local government, and then advocate with its government, and also create initiatives on the ground which help the government understand the value of this. So if we can create an outcomes fund to retrain unemployed older workers or younger workers, or if we create an outcomes fund to reduce the dropout rate from school or the number of kids graduating from primary or secondary school with acceptable levels of education, government is going to be sensitive to that. Similarly with slums. So we have to act locally through our 32 countries, but at the same time swap the experience that has been created in different countries and and help move governments in the right direction by following the examples set by others.
And Ronnie, how can we build this powerful message to send to investors, to governments? I know with the GSG, we're 32 countries right now. Each country has a local board or like an advisory board. So we are hundreds, if not thousands, of people that are working together. What should be this unite voice, this strong message that we can send as a G? I mean, what's this powerful thing we can use as a network to convince these sectors?
So part of the reason I wrote on impact, which was distributed at your last flea meeting, and by the way, it was taken from the manuscript of Impact, which has a lot of evidence that this impact movement and the things that it is advocating has spread very far. $31 trillion of ESG money, which aims to achieve environmental, social, and governance improvement through minimizing harm, admittedly, but nevertheless, improvement. And so I think the message to government is this isn't just something that can happen and should happen. It's something that is happening. It's happening with investors, as I've mentioned. It's happening with entrepreneurs, your field, where you see impact ventures, which are described in the book. We define the impact unicorn as a company which is a venture which is not just worth $1 billion, but improves the lives of 1 billion people. It shows that it is happening within some big companies, although big companies are not, on the whole, very keen to have their impact measured. The pressure of investors and consumers is driving them there. And it's happening within philanthropy, where impact philanthropy is beginning to use outcomes funds and use the endowment of a foundation to achieve its social aims. And it's happening with government, where government begins to focus on outcomes rather than just spending money on inputs. So I hope the book is something that you can all feel you can send, and I will be providing a number of books pro bono to each NAB. It's something that you can send to thought leaders, government leaders, business leaders, philanthropists, whom we need to convince. I think the times are ripe for this change. The world cannot continue as it has been doing. Capitalism served us well for 250 years in creating growth and so on, but its consequences are so great now that even governments can't cope with them. And so we do need to change. And I think what our movement is saying is, if we look back to 1929, we say, my God, were investors really investing without being able to measure and compare profit properly? And I think after COVID-19, we will look back and we will say, my God, before impact weighted accounts, were people just investing on the basis of profit without worrying about the social and environmental impact they create? But there are obviously lots of questions, and I see our participants are raising their hand, Rodrigo. So I'm happy to answer another question or two, and maybe then we can go to the audience. You're on mute.
Sorry, it's a little bit noisy with the kids at home, so I'm trying to do it mute. So, Ronnie, you were pretty much one of the creators of the venture capital industry in your past experience, and then you started with impact investing, and I mean, we all admire you, and you earned the what people call you the father of impact investing in the world. So that's amazing how you build one of the biggest private equity funds in the past, and now you're doing all of this, and you create the social impact bonds. I mean, you're a leader for all of us. You are somebody that's moving the needle. And so I have a couple of questions in that sense. Like the first one, it's like, are you having a third one, or are you saying an impact investing? And the second one would be like, you've seen how the impact investment movement has changed in the last probably 15, 20 years. Like, what would you think has been the biggest achievement of the impact investment industry so far?
Amazing questions, Rodrigo. No, I see impact investment now really as my life's mission, because our movement has grown so much, has developed the thinking so much. I think about it. When I started out on this road 20 years ago, I did so because the government said to me, look at poverty. And I looked at poverty and I realized philanthropists were helping governments. But philanthropy wasn't really supporting charitable organizations so that they could grow and deliver more services to beneficiaries. And I asked myself the question, why can't we bring investment to non-profits, non-profit entrepreneurs, like we do for business entrepreneurs? It doesn't make sense to bring money to those who want to make money and not to bring money to those who want to improve the lives of people. That took 10 years and took us to the social impact bond. First social impact bond was launched exactly 10 years later in 2010. And for the first time, we linked the financial return to a social improvement. And that may be the start of impact investment proper, because for the first time, we measured impact. And we realized a little later, through the work of the G8 task force, that the first social impact bond was important, not just because it brought investment to nonprofits, but because it optimized risk, return, and impact. And when we looked at the world, we realized that investors were going there, entrepreneurs were going there, consumers were going there. And so companies were going to have to go there. And so we realized that it was possible to optimize risk, return, impact, but more than that, that it was becoming necessary because of the scale of the problems we have. And then we started the work on impact-weighted accounts, because we said it's one thing to measure social impact bonds impact on prisoners or dropouts from school or homeless or people or pre-diabetics or whatever you want to pick from the 200 impact bonds in existence now. But how do you measure the impact of companies? Because if you don't give investors the tools to be able to compare the impact of companies like they compare today the profit of companies, then they will never be able to use their investment capital to achieve maximum impact. So I think the biggest achievement of the impact movement is this optimization of risk, return, impact, and the measurement of impact. This can change the world, and the world needs that change today. I think we should go to questions. I keep seeing hands going up.
Okay, do you want me to go? There's a question from Jimena Arguelles, and says, how do you think can big corporations help small and medium businesses survive the crisis other than giving reliefs or buying products?
Yeah, so I'm not sure big corporations are necessarily the best place to help smaller businesses come through this crisis. They have gone through a very tough time themselves, and they view anything imposed on them as an additional burden that detracts from the attention they need to give to creating jobs. But I think government could ask companies to purchase supplies from smaller businesses in the same way that government has introduced the Social Value Act in the UK to encourage smaller organizations to supply services to the government because they are capable of delivering greater social value. I think you could have regulation that would require big businesses to purchase a share of their supplies from small businesses. I think that is, quite feasible. Aside from getting orders from big businesses, it could be that big businesses are able to retrain part of their workforce, and that some of the people they retrain become capable of being recruited by smaller businesses, so they can play a useful role in reducing unemployment, and small businesses can benefit from that.
Okay. I don't think, Maria, do you see any more questions or? No?
Just one, Kim. Do you think a small change on any branch can lead to a big impact in the society that we're about to become? From Lucia, Enar Lucia.
I do, Lucia. I think the impact that we deliver as consumers is what has driven $31 trillion of investment now in the direction of ESG. So I think every individual has a role through consumption, often has a role through employment. Like if you buy your boss impact and can get your boss to start thinking in terms of risk return impact, you can help your company to change the world. If you're an entrepreneur, if you begin to measure the impact of your company and manage it, you can grow faster and you can be even more profitable than without it. And I want to just give you an example of that. Sitting here in Israel, where I am at the moment, there's a company called Orcam. Orcam is a fantastic impact venture. It invented a pair of spectacles for the blind. What does that mean? It means a blind person who puts the spectacles on will have whispered into their ear the page of the book they're holding, the banknote in their hand, and it's beautifully read, and it can even be translated from one language to another, and it applies to multiple languages. Now, that's an amazing impact venture, which addresses 35 million blind people in the world, and also 280 or so visually impaired people. So about 300 million people in the world. But if you're an impact venture, you ask yourself the question, how can my technology help the maximum number of people? And when you ask that question, you get a very surprising answer, which is, what if you gave these spectacles to the 800 million illiterate people in the world? What would that do for their lives, for their economies, for the world economy, to bring 800 million people who can't read into the population that can read? And so all of a sudden you have a business which can address a marketplace of 1.1 billion instead of 300 million. So I'm a firm believer that entrepreneurs setting up ventures which are small but ambitious, if they integrate impact into their business models, will be able to create impact unicorns where the company they built isn't just worth $1 billion, it also improves the lives of 1 billion people. And I think that's going to be the future. So whether it be as a consumer, as an employee, or as an entrepreneur, young people in particular, who are driving this revolution, really have a leading role to play in bringing it about.
Questions are flooding in. I don't know where to start. I'm going to read a couple because they're similar, and then so they're all thanking you for the inspiration and the insights. And Cecilia asked, what is the message she has for the next generation of impact investors? Francisco, focusing on the private sector, how do we get more families engaged in impact investing business models? And Daniela is always saying that it's an honor to being able to answer Cohen a question. How do you think the evolution of our current financial institutions would look like to transition to a social impact mindset? I don't know if that's too many questions. But...
No, wonderful, wonderful questions. Look, each of you is a member of a family. Each of you sits down at dinner and engages in a dinner conversation. You have to bring that conversation now to the subject of the book, which is impact isn't just a peripheral thing. Impact is something we can bring to the center of our economic system and place alongside profit to keep profit in check. And it will improve lives and the planet and bring solutions instead of creating problems which we need to be taxed to fix. So I would encourage all of you, you can go on the On Impact site, which is the previous manifesto. You can have it free. You can tweet about it. You can direct your friends to read it. If you're interested in knowing more about how the impact movement has changed investment flows, entrepreneurship, consumption, government, and philanthropy, then you can buy the book, which is also short. We cut it back from 400 pages to less than 200, short and readable. Now, within the chapters of the book, there is one on entrepreneurs, there's another one on investors, and one on big businesses, on philanthropists, and on governments. So 5 big stakeholder groups. And within the investment chapter, you will see that there are already very sophisticated asset managers around the world, BlackRock, of course, but many others, and very sophisticated pension funds that have already begun to direct 15% of the world's investable assets, 31 trillion, but more than 30% of managed assets in the world, which are about 85 trillion. So you will see that actually consumers brought investors to change their priorities when they invest. They did that because they were buying mutual funds and they didn't want to buy defense stocks and the gambling stocks and alcohol stocks and cigarette stocks and all the rest of it. But they also did that through pension funds. The health workers in Holland went to their pension fund investment manager, and by the way, pension funds hold $38 trillion, more than is already being invested in ESG, although part of it is pension fund money, and went to their investment managers managing their pensions and said, we're health workers, we don't want you to invest in companies that ruin the health of people. It's as easy as that. And that led them to allocate 20 billion to impact and ESG. So where we need to put pressure today is through consumption, through employment, and through our pension plans. Most of you on this call may have a pension plan. I bet you don't even know who's managing it or what the pension plan is investing in. Well, start finding out, send them a copy of the book and say, I want you guys to change your investment strategy and bring other like-minded people to do the same. So when we call it a revolution, it's an evolution in thinking, but it really is a revolution in the means that we can apply to improve lives and the planet. If your savings can save lives and the planet, wouldn't you be happier?
Ronnie, I was, you remember that Sebastian reminded me that for the last plea, Sebastian and you help us translating the book in Spanish. So on Impact, it's in Spanish already, the version, and we're gonna send you a link so you can read it for free. I mean, thanks to Ronnie, we provide a lot of copies, like 1,000 copies, the last plea. But now it's gonna be available online, and we're gonna be sending the link soon. So thanks a lot for doing that.
There's many more questions in the Q&A. So I'm going to read 3 and then you can take one at a time. Ana Laura Fernandez from Fondo de Fondos wants to know what would be your advice to improve the impact ecosystem in LATAM. Victor has a more COVID-19 oriented question. You mentioned that one of the big COVID-19 issues is unemployment. Do you think also labor conditions will change positively, negatively? And then Arantxa, do you think a business model that uses technology can drive to more impact? So I'll leave you with those 3. Well, I can read you 2 more and then you can. How do you perceive the support from political leaders to impact investing?
Okay, Maria, let me deal with those. So LATAM.
Perfect.
Okay, so LATAM. The big issue in LATAM is that bringing international flows of capital, say to a country like Argentina, where the currency has become very volatile and so on, basically closes that impact market to foreign investment flows. And so you have to go to local pools of capital, to pension funds, to insurance company money, and you have to design products that make sense for them. But we've shown that it is possible to do that. If you want to deal with the slums of Argentina and you need $16 billion, let the government provide a guarantee for social bonds and then add to that impact bonds that train people for jobs or help kids complete their education, pay for success, in addition to social bonds, which fund the infrastructure that you need if you're going to tackle a slum. You need to provide water, you need to provide electricity, you need to give those living in these slums the ability to own the land they live on. So you may need to give them a zero interest mortgage on a very long-term basis. And government has to provide that initial infrastructure funding, but then investors can get involved in, on the impact bond side. High net worth individuals, foundations using their endowments, funds will be set up that invest institutional money. There already are some, and so on. COVID-19, it could go either way. We could find ourselves coming out of this crisis with greater inequality, greater unemployment, and companies trying to cut their costs to the maximum, and that could affect labor conditions and and so on, and unemployment. Or we could come out of it with the feeling that there needs to be a new deal, has happened in 29. There needs to be a new deal. People are not going to be satisfied after COVID to going back to pre-COVID life. And I think we, the impact movement, are really leading on that. We're the ones who have a vision that goes beyond saying the system isn't working effectively. We have a vision that goes to say we need to measure impact dependably for a company. It needs to be through its financial accounts. If we do that, the combination of investors and companies receiving investor money will actually turn our economies into impact economies. And a group of impact economies will become impact capitalism. So I think it's in our hands. I think we have to push this idea that a new deal is required and it's an impact deal. Technology, of course, technology is a huge help. Without technology, you would miss a lot of tools. I gave you the example of Orcam that can improve lives. Tech for good is a major opportunity today. And each of you who is technologically savvy and thinking in terms of a venture can find technologies that can help achieve their social or environmental goals. And now the political question. You know, it's a strange thing, but at a time when the world needs to act as one politically, the world is fragmented and pitted against itself. So we have to go to individual governments to set the example. There are some governments which are more inclined to believe in this approach. And so at the GSG, we're making an effort to work with these governments. Many of them are in Europe. Some of them are in Asia. If you look at where impact wholesalers have been set up, South Korea is one of the countries. If you look at where unclaimed assets have been released for social purposes, it's in Japan. And if you look at impact measurement, you see the EU has taken a step in that direction. And I think our strength at the GSG is that our NABs locally, coming back to your original question, Rodrigo, at the beginning of this chat, our NABs are able to work out where the government is likely to go. And then we can help our NABs, our national advisory boards, to go in that direction. We can do it by bringing thought leadership documents, such as the publications that we've put out. We can do it by sharing the information between governments. We can do it through advocacy that leads to parliaments, as they did in South Africa with the help of our NAB, beginning to talk about the impact of stimulus measures. As a movement, we have a big responsibility. There are 500, 600 of us sitting on national advisory boards, but we're a lot more powerful than that through all our connections. So I think politically, work out in each of your country, what is the one issue or the two issues that my government is sensitive to? Is it unemployment? Is it slums? Is it education, or is it something else? And then let us work out what we can propose to our governments to help them do their job by bringing investment capital, and where they pay only when the results have been achieved, for instance.
Thank you. So I'm going to read one from Vanessa Gonzalez, and it's saying, and then another one that is a little bit lengthy but very interesting. So Vanessa wonders, in Mexico, there is a rigid law that regulates pension fund investments. What can we do, or send letters to Congress in order to change the law so pension funds may invest with impact? So that is one question. Another question about from Francisco. What would you say to the wealthy people and elites of our countries that have some of the highest levels of inequality in the world, that they could do to accelerate this change and build reconciliation in societies? Do you think their participation is important?
Yeah. So pension funds. If you look at what happened in the US and in the UK, lobbying by our national advisory boards was helpful in getting government to change pension fund regulations and even charitable foundation regulations. So up until now, regulations required that the trustees of a pension fund or an endowment, a charitable endowment, a foundation, in other words, had a responsibility to make decisions solely on the basis of the profitability of an investment. In both places, this has now shifted to say trustees have to make a sufficient return, but a sufficient return can be achieved by taking into account environmental and social considerations. And in the UK, it even went further to say sufficient does not mean just sufficient financially. It can mean sufficient in terms of impact as well as financial return. So in your country, be in touch with the National Advisory Board and offer your help to begin to advocate change with government. You'll have to go to thought leaders in your community. You'll have to go to politicians. You'll have to work hard to get these regulations changed. But you now have a lot of ammunition, a lot of publications, a lot of examples in different countries. Now, let's come to wealthy people. The traditional model for somebody of my generation was make as much money as you can and then give away as much as you can, again, in inverted commas. That model is changing. It's becoming clear now to wealthy people that their children don't think the same way, that their children want to have jobs that have meaning, and that they don't want simply meaning to be about making money. Meaning is about improving people's lives and safeguarding the planet. So your generation, I suspect most of you on the call are in your 30s, 20s, 30s, or 40s. Your generation is going to be responsible for influencing, as I was saying before, the family dinner table conversation in the direction of mum and dad, please, let's not just give money away in philanthropy. Let's add to that impact investment. Let's use the wealth we have to invest in companies that are bringing solutions, to back ventures that are bringing solutions. And let us begin to fund organizations that are pushing these ideas of impact through our philanthropy. So wealthy people have led philanthropically. The Giving Pledge, a couple of hundred people who've said they will give away half of their wealth, all billionaires in their lifetimes, they'll give it away. But they haven't really got on the side of impact yet. Some have. Jeff Skoll is a very good example. Pierre Omidyar, who also was connected with eBay, like Jeff Skoll, both have. And we're beginning to see the Gates Foundation, through its grants program, working within the impact investment field. But most wealthy people really haven't connected with it, and that's your challenge. They are natural allies for us because of their children.
So the ones left are pretty lengthy, so bear with me. Jacob Stern asks, how can we prevent the focuses of impact investing from being short-sighted, just as a narrow risks return focus has proven to be? by simply shifting to a risk-return impact framework, might we be missing necessary prioritizations in terms of impact capital allocation? For example, towards climate change, which will exacerbate most other problems impact investing aims to alleviate, especially in the developing world. That's one. And from Pilar Cristobal, how can we support and drive more capital to impact-oriented small and growing businesses that are not necessarily tech-based and that represent the bulk of the emerging market companies? I see a need of developing and promoting the use of more flexible investment vehicles instruments, but there's no time given the urgency.
Okay. So on the short-term focus, if you have impact-weighted profits, which are growing at a fast rate, and you're reporting on them on a quarterly basis, it may well take you in an unwanted direction of impact also being looked at as short-term improvement. But I show in the book that if you are prepared to invest in fossil fuel companies, which I'm not, there's a lot of public information that tells you where the maximum damage is going to be made by your investment. So you can look at just the operational environmental impact, not the use of the oil, but the creation of oil fields and the extraction of oil. And you discover that Exxon creates $40 billion of environmental damage a year. And if you compare it with Shell, Shell is creating $12 billion of environmental damage. And if you compare it with BP, BP is delivering $8 billion of environmental damage. Now, if you are completely set on investing in fossil fuels, which again, I am not, but if you are, would you continue to invest in Exxon if $40 billion was knocked off their bottom line? Or would you shift to BP or Shell? You know? So the short-term focus to fix a major problem like that, which will require very high investment by Exxon, if it begins to see investors deserting it, its valuation going down while BP and Shell's valuations are going up, is going to have a beneficial long-term effect, because it's very tough to solve your impact on a short-term basis if what you're doing is your operations are overusing water in the extraction of oil, and that's a big chunk of the environmental damage you cause. You can't really bring a short-term fix to it. So I'm not saying every impact example is going to be like that, but by and large, unlike profit, when you're trying to hit impact targets, they tend to be short and long-term targets because they involve fixing something which requires capital investment and that therefore is going to affect your operations for a long period of time. I'm sorry, the second question, I was just writing down the first, Maria, when you asked me, it was again around small businesses, and what was the question?
I'll read it again, and then where did it go? How can we support and drive more capital to impact-oriented small and growing businesses that are not necessarily tech-based and that represent the bulk of the emerging market companies? I see a need of developing and promoting the use of more flexible investment vehicles instruments, but there's no time given the urgency.
So it's a very important question because particularly in countries where the informal economy is very large, and in some emerging countries, it's 60, 70, 80% of total economic activity. Small businesses are really the backbone of employment. Now, you can fund these businesses with cheaper funding if government is prepared to underwrite the risk, basically, provide you with a guarantee. And I think in this recovery, governments should do that. I don't think governments are going to recreate the jobs within large businesses that quickly. If we want this recovery to reduce unemployment quickly, money has to flow to smaller businesses. And so I'm very much in favor, again, of social bonds that investors can purchase that have a government guarantee, that are relatively low cost, and that go to smaller businesses. Now you can add to that an improvement in the low level of interest if they create jobs or if they deliver some other form of impact. So you can refine it. But we have to make sure that the stimulus doesn't just concentrate on big businesses this time. A lot of small businesses are going to be under huge pressure. Many will have gone bust and will need to restart. And it's in government's interest and in all our interest for money to flow to them.
Thank you. Maybe we can take one last question and then get some last minute conclusion thoughts to end. So this is Barbara Magnoni. She's also a speaker. And she asked, do you feel that by amplifying the market for impact, there is also a risk of greater pressure to show same returns with impact, given the expectations of more traditional players? Should this be a niche instead where trade-offs are understood as supporting business models that are fair to labor communities, etc.?
So I'm a great believer, as I said, that impact investment, optimizing risk-return impact, can deliver better returns than optimizing risk-return. Why? First of all, you eliminate certain risks of consumers walking away from your product because they don't share your values, a risk of investors walking away from your product, risk of talented members of your team walking away because they disapprove, risk of government regulation, which inhibits the growth of your business, risk of taxation, and so on. So bringing impact alongside risk return improves the risk side of the equation, but it also, as the Orcam example showed, opens the door to new sets of opportunities. And companies can grow faster and be more profitable if they think about impact in the right way. So I think we have to win this battle on the basis that risk-return impact delivers better growth and better profits. Now, what we're going to find, in the same way as the venture capital industry found it, not every investor and not every business wants to grow as fast as possible and deliver as big a return as possible. Smaller businesses often have social aims connected to their communities, for instance. And there will always be impact investors who are prepared to sacrifice some financial return for impact that is delivered, particularly if that impact is certain, can be measured dependably. So I think we have to be careful to fight the battle on the basis that every few years, every few decades, new investment themes come along. There was a theme when I was in my mid-20s, which opened the door to venture capital and private equity. It was the theme of diversification of a portfolio, which came from measuring risk, interestingly. So because we began to measure risk, we got the concept of risk-adjusted return. And with the concept of risk-adjusted return came the concept, oh, if I have many asset classes, even riskier ones like venture capital and private equity, if they deliver a disproportionately greater return should be included. So these changes in themes come and they lead to huge changes in our lives. Venture capital funded the tech revolution. Diversification opened the door for it. It also opened the door to investment in emerging markets, which funded globalization. If it hadn't been for the concept of diversification, most pension funds, insurance companies, and wealthy investors' portfolios might still have equities of their local stock exchange and government bonds of their government. Impact is the same, in my view. Impact is going to change the thinking around portfolios. It's going to lead companies to prove that if they deliver more impact, they attract better talent, they attract more faithful consumers, and investors make more money by investing in them. And we're already beginning to see some of that. Like in the first few months of this year, ESG funds outperformed other funds, you know? So we will establish that. And we have to stay then flexible to say, look, personal preferences will dictate if you want a market rate of return for doing good. If you want to do just as well as you could by investing in everything else, or if your values are such that you're prepared to take a lower financial return in order to achieve a particular impact. But I'm convinced that we have enough evidence now, and again, the book shows it in the ventures that it describes, that when you optimize risk-return impact, you can actually deliver better returns.
Thank you very much for that. So I would love to end. We ran a little bit over, but with such an interesting and insightful conversation, it's hard not to. If you would like to share with the audience, both of you, how do you see the impact revolution in the future, and with an optimistic approach to combat the complexity of the current situation, or the reflections that you have to end, it would be lovely. Thank you.
I'd like to thank Rodrigo for sharing the stage with me. Rodrigo, always a pleasure to fight shoulder to shoulder in this revolution. I would close, Maria, by saying, when I was 24 and leaving Harvard Business School, I felt that something was in the air, and that small was going to be beautiful, and that venture capital was going to lead to small companies being more innovative than bigger ones. At the time, in Europe, people couldn't even spell the word entrepreneur. Venture capital meant nothing. And people said, it's a sure way to lose money. And we would have to say, well, sure, it's riskier, but if you can jump over a precipice, we use this exact example, 20 times without falling, does that make it too risky? The same is true of impact. Impact is in the air. Values have changed. The attitudes that we had to young entrepreneurs without a business plan who wanted to change the world through technology are being shifted to those who want to use every means at their disposal, including technology, to improve lives and the planet. And it's coming not out of choice, but out of necessity, because we cannot cope with the scale of our social challenges and our environmental challenges without measuring impact and managing impact. And it's what your generation wants. So impact is a message of hope. It is the way to improve the world and create a fairer life for people. So I leave you with this message: start young, think big, and stick with it. Thank you.
Ronnie, you're always an inspiration for all of us. Thank you very much. It's very well needed here in Latin America. I believe that Latin America and the region could be one of the regions that impact could do a lot of good. I mean, it's tough because we're a lot of different countries, but as you mentioned, I think we have to start by convincing the people, by convincing everybody, universities, press, governments. We cannot just think about convincing one government at a time. I think the movement goes beyond that. I think we have to keep fighting for this. I mean, there's a big community in Latin America, and you are inspiration to all of us. And I'm pretty much thanks to you, Sebastian, that have been supporting through the GSG this more organized movement. We're getting there. So thanks a lot for your inspiration. Thanks a lot for sharing this time with us. And thanks for all your achievements and all what you left to the impact investment industry, and probably hope to see you in a couple of different places. And after the COVID experience, let's see how it turns. So thank you very much, Ronnie. You're an inspiration, and be safe, and have a good night there in Tel Aviv.
Thank you. All the best. Bye-bye.
Thank you.
Bye.
Bye.
Bye-bye.